build your plant if you want to stop paying the taxes or the tariffs.
The dollar gained strength against all its peers on Tuesday, as comments from President Donald Trump and his Treasury Secretary raised concerns about widespread U.S. trade tariffs. The Bloomberg Dollar Spot Index increased by as much as 0.5% after Trump stated that he was considering universal tariffs on products ranging from steel and copper to semiconductor chips.
In particular, in the very near future, we're going to be placing tariffs on foreign production of computer chips, semiconductors, and pharmaceuticals to return production of these essential goods to the United States of America.
The euro dropped by as much as 0.7%, and the yen fell nearly 1%. These movements followed weeks of discussions regarding the potential scope of tariffs, with Bloomberg News reporting earlier this month that Trump's economic team was considering gradually increasing levies. A report from the Financial Times on Monday suggested that Scott Bessent, the new head of the Treasury Department, supports gradually implementing universal tariffs starting at 2.5%. Trump later expressed his desire for tariffs much bigger than 2.5% and hinted at imposing specific tariffs on automobiles from Canada and Mexico, countries he has previously threatened with 25% tariffs starting on February 1st. This raises the possibility of tariffs that will last for some time, and that the threat to implement them is credible, which will support the dollar, said Nick Rees, head of macro research at Monex Europe. U.S. Treasuries declined, reversing a rally the previous day that had lowered yields to their lowest levels this year. The 10-year yield increased by 3 basis points to 4.56%. The dollar rally followed a tumultuous day for global markets. A Chinese AI model advancement wiped $589 billion from NVIDIA Corp's market value and sparked doubts about U.S. tech dominance. This news initially pressured the dollar lower as concerns grew that doubts about the sustainability of U.S. economic outperformance could diminish the appeal of its assets. A deeper sell-off in U.S. tech stocks poses risks to our outlook for a stronger U.S. dollar, especially if driven by a reduction in expectations for continued U.S. exceptionalism, said MUFG FX strategist Lee Hardman in a note. Investors had bet on a stronger dollar, assuming that Trump's policies would push prices up and keep U.S. interest rates elevated. However, signs of exhaustion are emerging, with speculators retreating from their most bullish positions on the dollar since 2019, according to a Bloomberg analysis of data from the Commodity Futures Trading Commission. The greenback, which generally benefits from tariff expectations, advanced more than 7% during the final quarter of 2024.